Now, the Federal Reserve's largest rate hike in more than 20 years is what's happening, and it's an attempt to curb rising prices. But that means costs for Valley families will go up in the short term. ABC 15's Lustelia Caballero sharing how this will affect people right here in the Valley.
The bottom line is Valley families will see costs rise on everything from credit card bills and loans to higher rates on new mortgages. We spoke to experts about what this will mean and found you can still do some things to take advantage of this interest rate hike.
We're feeling it here.
Greg Barr with the Phoenix Business Journal talking about rising prices, increasing at a rate unseen in 40 years.
Phoenix in particular has seen higher inflationary numbers than the rest of the country. In fact, we were the #1 metro for inflation through the first quarter. I think it's over 9%.
A reality, he says, affects everything, going beyond grocery and gas prices.
Now you suddenly get an increase in interest rates. So to purchase a mortgage. So then that puts pressure on people who are thinking of buying a house.
Over the last several years, we've definitely been in a seller's market.
Bridget Valenciano, a mortgage loan officer with Summit Funding, seeing this firsthand.
There's just not enough homes on the inventory right now,
causing home and even rent prices to go up. And with the Federal Reserve hiking its key interest rate by 0.5% this week, coupled with skyrocketing housing prices, Valenciano says first-time homebuyers are being affected, some not able to qualify for as big of a mortgage.
With the increase in interest rates, let's just say 2.5% from where they were, about 50%. So your mortgage payment with principal and interest at $2,000 is now $3,000 today. Putting that in like purchase price perspective, a $400,000 house a year ago today is going to cost you $530,000.
Valenciano says the increase in interest rate will also directly affect credit card rates, auto loans, and home equity. But the Fed's move is also giving Arizonans a chance to let their money work for them. On Wednesday, the U.S. Treasury announcing its risk-free bonds tied to inflation would pay nearly 10% for the next 6 months.
Any U.S. resident, any citizen, could look at this because you can buy up to $10,000 worth of these Series 1 bonds. They earn the annual rate of inflation.
Though there are strings attached.
You have to hold them for at least a year. And if you sell it before 5 years, you lose the last few months of interest.
So is there a downside to this, or at the end of the day, you're making money?
Yeah, at the end of the day, you're making money.
And for tips on how you can handle inflation, go to our website, abc15.com. Reporting in Phoenix, Lustelia Caballero, ABC 15, Arizona.